Welcome back to the channel, guys, for another video. And this week I thought a lot about this video I'm making now, and I didn't know what direction I wanted to go in. And there are some times I sit down and I'm thinking, what should I make a video on? And mainly that's because I just don't know which direction to go in, because I'm trying to make videos I would want to watch and I enjoy making, because I feel like that's just important, especially where the channel is right now and when starting some sort of new business venture. But this week, it was because there was so much that went on, or the past couple weeks rather, there was so much that went on, I just didn't know which video I genuinely wanted to make. The major indexes being the Dow, the S&P, and the NASDAQ slid again for the third straight week. I could have done a stimulus package video because that's all that's on everyone's minds, and obviously everyone just wants more money, even though it's not technically free money as people think it is. I also could have done a video on where I think the market's going next, if I think the market's going to continue to just rise because stocks only go up, or if we're going to continue to see this correction that we've been seeing. But ultimately, I decided to make a video about this stock that just recently went public not too long ago. And obviously, by the title of this video, you guys know what this stock is. And that stock is Snowflake, ticker symbol SNOW, and that actually trades on the New York Stock Exchange. But before we get into Snowflake, if you guys do like these videos I'm putting out, if you are enjoying the content, please like the video, please subscribe to the channel. These two things only take 2 seconds, and it does help the channel out a lot, and it really helps the channel grow. And it allows me to get these videos out to more people who are more interested in stocks, personal finance, business, or any of those fields. So Snowflake filed for IPO. They officially went public a couple of days ago. But what is an IPO and what does it mean when a company goes public? So IPO stands for initial public offering. Basically, when a company is private, it's hard for those average Joes like you and myself to buy it. Think of a private company as something you'd see on like Shark Tank. Obviously, if you saw something on Shark Tank and you called up that person and you said you love their product, I'll be willing to give you $10 million as an investment. That might be a little appealing to them. But if we did call them and said, hey, can I buy a single share? You're not going to get the most heartwarming response, I would imagine. A public company, on the other hand, is a company where you can just log onto your phone or your computer, any of your brokerage accounts, and just buy. So like Apple, Google, basically any stock you can think of are public companies. And when these companies do file to go public, it's a process. It's not something that's really done like overnight by any means. Basically, in short, there's a lot of fees and can be expensive. They are subject to be overseen, and they do have to report all their information to the SEC. And it can definitely be stressful. It's not the most leisure process by any means. So in saying that, why would a company do this? Basically, the reason that companies do this is to bring in new investors. So people like you and me, average Joes, can invest in the company. We can buy stock X for $100, and we can buy one share of stock X and be a quote-unquote investor in the company without having to put like $10 million or anything really extensive into that company. Because in all reality, I'm sure this goes without saying, but not everyone can afford to put $200 million in a company, or $200,000 or $500,000, or really high amounts of money. That's just not for everyone. So companies go public so more average Joes can invest in that company, and therefore the company ends up raising more money. But when a stock does go public, usually that's not the best time to buy it. You'll see a lot of stocks spike, and by the time like average Joes like you and I can even get to it, forget it. It's like way, way overvalued and it's not worth it. So they'll spike and then they'll tank. Look at Lyft. Lyft was super high when it first IPO'd, and now it's actually lower than when it IPO'd a couple years ago still. Granted, there's a lot of things going on with Lyft with this virus that is definitely not benefiting them, but that's besides the point. And I think this Warren Buffett quote fits IPOs really well. That quote being, an IPO is like a negotiated transaction. The seller chooses when to come public, and it's unlikely to be a time that's favorable to you. And granted, this quote might seem a little counterintuitive with what I'm going to say about Warren Buffett very, very shortly, but he's got a good point here. Basically, when companies go public, they're just not the right valuation a lot of the time. Now, back to the point of the video, Snowflake, as we have been talking about, IPO'd recently. And at first, I didn't really think too much about it. I knew what Snowflake was. I wasn't really overly familiar with it, but I was aware of what it was, mainly from working with other cloud-based platforms. I just knew Snowflake was, I guess, a competitor, you could say, even if they weren't public. So when I saw they were filing to go public, I didn't really think too much of it, and then I saw this article. Snowflake received a vote of confidence Tuesday after a filing revealed that Berkshire Hathaway and Salesforce each agreed to purchase $250 million of stock at the IPO price in a concurrent private placement. And keep in mind, Buffett he does not buy IPOs, if you couldn't tell by that quote, and this is the counterintuitive part that comes in. He actually hasn't bought an IPO since Ford went public in 1956, so well before my time. Berkshire Hathaway agreed to buy an additional 4.04 shares from one of Snowflake's current stakeholders in a secondary transaction. The company said that the midpoint of its pricing range for the IPO is expected to be $80 per share. Yeah, right. Which would value Berkshire Hathaway's stake at more than $550 million at the time it goes public. At that price, Snowflake would have a market cap of $22.3 billion based on the latest shares outstanding count in the prospectus, marking an almost $10 billion increase since February when Salesforce led a financing round at a $12.4 billion valuation. And picking on the Salesforce thing a little bit, for those of you that don't know, Salesforce actually was just added to the Dow last month, a couple months ago, very recent. I can't remember the exact date off the top of my head, but it very recently happened, which is also a cloud-based software company. And then obviously Berkshire Hathaway, we know that's Buffett's company, that's Buffett's mutual fund. So, and I saw these two things and I'm like, all right, this stock's getting some attention here. I gotta look into it, I gotta make a video about it. As for Snowflake, basically in short, Snowflake is a cloud platform, more specifically a cloud-based data warehouse, meaning like storing and accessing data and programs over the internet instead of like the computer's hard drive. So think of like Google Drive, Microsoft 365, Salesforce, those are all examples of cloud platforms. You can basically be anywhere on any computer and you can just log in, and as long as you don't forget your email, username, or password, your login, you can have access to any of the projects, any of the documents you've saved in there. But something like Microsoft Word, that's not a cloud-based platform. If you save something on Microsoft Word and you drive to your friend's house and go on their computer, and if you didn't send that document to your friend or to your own email, that's what I usually do, I just email it to myself, you're not gonna be able to get that document. That's just the bottom line here. In professional, like I guess word for word terms per se, Snowflake offers a cloud-based data storage and analytics service, generally termed as data warehouse as a service. It allows corporate users to store and analyze data using cloud-based hardware and software. And then from Snowflake's perspective, our platform solves the decades-old problem of data silos and data governance. Leveraging the elasticity and performance of the public cloud, and our platform enables customers to unify and query data to support a wide variety of use cases. It also provides frictionless and governed data access so users can securely share data inside and outside of their organizations, generally without copying or moving the underlying data. As a result, customers can blend existing data with new data for broader context, augment data science efforts, or create new monetization streams. Delivered as a service, our platform requires near zero maintenance, enabling customers to focus on deriving value from their data rather than managing infrastructure. Now, if you look at the valuation of this company, you can already tell there's been some intense growth here. I just said that the valuation has increased by 10 billion. You're gonna even be more blown away very shortly here. So like I just said, looking at this, from September 2017 to February of 2020, the valuation increased from $500 million to almost $12.5 billion. So right there, that's near 20x in 3 years. That's not even including with the investments from Salesforce and Berkshire Hathaway. That's even some more growth. I don't even know what that math comes out to off the top of my head, maybe 40x or something ridiculous like that. In July of 2020, this company reported revenue of $242 million for their 6-month period that ended in July, at the end of July. And this means that the company grew revenue by about 133% from the same period last year, which that is when the revenue was only 104 million. But also remember, this company is not profitable yet. They did report 171 million in net losses for the 6-month period ending in July of 2020. And this compares to the 177 million they lost last year, net loss that is, for the same period. So I guess their losses have decreased, but not by a whole ton, more of like a break even, very small margin perspective. But there are some positives around this stock. Obviously, it looks like this company is going to continue to grow rapidly over the next 5 years or so. They have raised a lot of money from investors, which is great. Having Warren Buffett in your corner is definitely a good thing to have. And overall, it seems like a good long-term opportunity as long as revenue continues to grow. But there are some negatives about this company as well. Obviously, they're not profitable. The company lost 178 million last year, as we discussed not too long ago. And if you're looking at the numbers that are on the screen right now, obviously those are some big losses. And the stock price also skyrocketed when it IPO'd, or since it IPO'd. And take a look at this here. Shares of Snowflake surged 111% in Wednesday's session after the company produced the largest software IPO on record. The stock's big rally, which came after Snowflake priced its offering above an already raised range, left the company with a market value of roughly $70 billion. 70 billion, more than 5 times the private market valuation of 12.4 billion that is fetched in February. The company has become the largest market value to ever double on its first day of trading, according to Dealogic data that goes back to 1995. But it does check some big boxes. It is in the tech industry. It does have to deal with software. It is a cloud-based platform, so it is checking some big boxes where society is going, which is good to see for future growth, which brings me back to a good long-term opportunity. But at the same time, if you look at any of the metrics of this company, PE ratio, net losses, anything, it's completely overvalued, like almost to the point it's like silly, and it makes me want to laugh at it. And this is the reason I really haven't been buying too many stocks lately, just because evaluations are ridiculous, and I just can't get myself to buy a piece of the pie that's just completely overvalued, overpriced. I just can't do it. So in saying that, I'm really not going to be buying Salesforce, although I do have interest in maybe getting into it in the future, but the valuation's got to even out. It's just, I can't do it right now. It's way, way, way too rich for myself. But as always, make sure you do your own research and develop your own opinions, because I am not a financial advisor. I'm just some random guy on the internet talking to a camera by myself in my living room. So make sure you do your own DD. That's going to be it for this video, guys. I just wanted to give a quick valuation of what I think of Snowflake. Let me know in the comments what you think of Snowflake, if it's a good buy now, when you would like to buy it, where you see this company going over 5 and 10 years. Like, subscribe as always, and I will see you guys in the next video.